CryptoKeo here, giving you a new ICO that I saw being promoted. At a first glance, it looked pretty good because it met one of the requirements that I made a video on to pick ICOs. Although it made one of the main requirements, I don't want to say main requirements, but it made one of the requirements. It had a few things that was missing, and I just wanted to go over it with you. And then you decide exactly what you want to do. Of course, I'm not going to leave a link to it, but there are different YouTubers that have links. One of them, I think his name is Mike Michael. If you use his link, you'll be able to get 50 of these tokens when you sign up, and I guess buy something in the ICO or if you sign up. So it's called Crystal Token, and at a glance, when I was watching this video, um, they said they said that well, first, this is going to be on the 26th um, of February, so it's coming pretty soon. And at a first glance, what was described was that they already had the platforms already ready as soon as the ICO was good, and that was one of the requirements that was met. So how to analyze projects or ICOs? So planning. It need to show that they have a product or achieved something in the past. So um, it doesn't show that they've achieved anything in the past, but as soon as the ICO is done, you can start staking your tokens. And instead of waiting for them to build something, you can actually start generating more tokens so that when the internal exchange comes, you'll have, um, I believe, 3% more of. Okay, so this is the strategy that they have. They have the core strategy, which is trailing stop loss is not set at a fixed price absolute amount, but it is set at a certain percentage below the market price. So, this is a lot of technical stuff, and I want to go over this, but first, I just wanted, before you guys turn this off and lose interest, I wanted to quickly go over, let's see, the virtual the business model. So they have here are some equations and how they're going to value the token, and you guys can check it out in the white paper. Let's see. I'd rather have it like this. Single scroll. There we go. So the internal exchange is going to have a certain amount of equations to determine the price of it. Price being sold compared to how much ether is in there, how much ether you spend, and so on and so on. And you can take a look at this real quick. And of course, all of them say that they're gonna auto burn, and all of them say that they're gonna have a visa, but also they have to be get sustainable until the point where they develop the visa to use these tokens offline. Okay, so they have these trading techniques, which there's a lot of technical stuff in it, and if you're not really, if you're not too knowledgeable on trading, this could kind of be like someone saying wah 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 wah. So you have to at least know something about it in order to kind of understand um, what the heck they're doing and say, okay, this is a good idea, or no, this is not a good idea. Um, they're always talking about arbitrage, and they're selling, before a certain amount that they designate. They will sell. Let's see. Let's move on to. Of course, they're saying artificial intelligence. These are different ways that they're going to uh, try to give us a return on investment on our coins is through, trading in the market and using different methods. Um, Okay, and this is they're going to use sentiment analysis, which is pretty much what the news is talking about, and then how are is the society or like they say, so sentiment, how is the public receiving that news, and based on that they're going to do their trades, and then they have different algorithms for the different strategies that they have, which are present above, and then they're going to pretty much teach their AI how to learn from these decisions, and then they're going to sell, buy or sell. They're going to have different trading servers. You can actually go into as far as they're talking about that. You can go to Bittrex and Poloniex and um, be one of the traders and in the market with them with their services. Let's see. So for the staking, it says that, okay, so here, so as soon as the ICO comes, you'll be able to um, generate some more tokens while the internal exchange is being developed or is coming in the next month. So it says here the full benefits virtual staking program is tailored for those customers who desire a solid, constant passive income source capable to attack the huge volatility of cryptocurrency market. This also depends on whether this token survives, because regardless of the volatility, if you keep your tokens safe in a place where it really it's almost like you're keeping your dollars or your yen or your euro under the mattress. But if the dollar, yen, or euro um, all of a sudden crashes and has no value, like the Venezuelan currency, there's no point in keeping it safe because it has no value. So this all depends on whether this will last. The term that it says it will. So, I always try to be as optimistic as possible, but optimism sometimes doesn't make you money. So you have to kind of analyze a lot of things. So, going on, we offer competitive plans with three different ranges of investment. Each plan provides increasing benefits as specified in the following. The actual percentage of interest can reach up to 2% daily and depends on the market volatility and trading operations performed, and it will be made public on a daily basis. Our virtual staking program is unique and is based on two different tokens: the CYL token, our main ERC20 token, which will be sold during the ICO, exchangeable for ETH, and usable to open a virtual staking contract. BCYL, which is a virtual staking contract for this token, our virtual token that will be used to pay daily interest and referral bonuses. They can be converted to CYL tokens at the current market price. The value of the VCYL token will be strongly tied to ETH and will be also worth zero point 0.001 ETH. So, for example, if the value of ETH is $1,000, the value of VCYL will be $1, while the market will decide the value of CYL, and that's very important to realize that the market has the control over this token. So there's a lot of pump and dump here, or which they say they will control by eliminating whales from this token. If people are losing trust in these lending platforms and staking platforms, they have control over it. So a lot of these tokens, a lot of these companies depend on the investors to have faith in them. So you kind of have control over whether this is going to be a good token or not. Moving on, customers will be able to open the virtual staking contract by spending their CYL tokens that will be converted to VCYL tokens by the system, or directly from the CYL token earned as daily interest or referral bonuses. So they give you almost like um, a I guess a visual on how this is going to work, and you can look at this in the white paper and see how the VCYL is going to work, as well as the CYL is going to work on both bases. And you can take a look at this a little closer. Let's see. So the proposed virtual, the reason why I am focusing on the virtual staking is because that's the first thing that's going to happen right before the ICO. So if you want to take advantage of this before the internal exchange comes and make yourself more tokens, you can do so. And instead of just waiting and seeing how the token is valued or devalued, I think by staking, and I'm not promoting this company at all. I'm just making my analysis. By staking this, you kind of retain the value of this token if you're an investor, if you're looking at the long term and you're thinking about making this company or this coin a success. I mean, this token a success. The proposed virtual staking plans significantly differ from the classic staking plans and overcome all the limitations of past lending and staking platforms. People will never have to choose between holding their tokens and opening a contract in the platform, since our plans also provide CYL tokens as a reward at the end of the contract. For example, customers who invest more than 2,500 VCYL will receive 3% of their initial investment tokens in CYL. Customers who invest more than 10,000 VCYL will receive 7% of their initial investment tokens to CYL. For example, if a user opens a contract of 1,000 CYL worth 5 VCLY each, the contract value will be 5,000. So it seems like one token, if you stake it in the virtual staking, will be worth one CYL will be worth 5 in virtual staking. So that's pretty good. At the end of the contract, he will receive the capital back, 5,000 CYL plus 30 CYL tokens and their current value, which would also worth 10 times the initial investment capital. This reward represents the ultimate solution to the contrasting strategies adopted by professional cryptocurrency traders, who also must decide whether hold their token or open a contract in the platform. So moreover, we offer the user the possibility to boost such a bonus by enabling token bonus options, which reward the additional 3% of CYL tokens invested in the contract when it is prolonged for 30 days. Now, note that during such 30 days, no daily interests are paid out to the user. The third advantage of our full benefits virtual staking program comes from our unique pure reinvestment functions. So if you can invest this for 30 days, which is, I mean, they don't give you a specific date when the internal exchange is coming, but it seems like from the time of the staking to internal exchange, it seems like it would be about a month. So in that time frame, instead of your tokens just sitting there, they could be reinvested, and you can actually lend or cash out during that time with more tokens. And it gives you different, if you want to lend in short term, it gives you different daily payouts, and it gives you the referral. One referral will, so if you refer somebody, it'll give you 10%. And this is there's 28 million supply, and it seems like in total, if I am getting this right, that's 10, 16, 15 million is going out to, in total, is being used. And the rest is either going to be burnt or resold. Uh, so 20 million. So the initial coin offering. So each round is going to be 3 days. If it says so, the default schedule will be 3 days for each round. But if the time limited number of users was able to buy, no, but if too limited number of users, so that means that if whales were the ones that were buying most of the stuff, um, considering the ratio between the amount of successful transactions and the total amount of transactions, the next round will be scheduled in the following minutes. So if too little bit of people bought in the first round, they're going to have the round follow up in minutes and not just days. Let's see what else is important. So the fact, so one of the requirements is, do they have a product ready? Well, they do have one of the products, which is the staking, and the next month they have the internal exchange, which is, and the product that they're trying to do has to either be within weeks. Let's see, where's my notes? Yeah, so immediately, not in a month or in a week. So immediately they do have the staking platform, and in 1 month they have the internal exchange. So they have they show their minimum viable product. Let's see, they need to have more info on their product. So they have a lot of information on their product, how um, they're going to trade in the market in different methods. The only thing is they don't have, I mean, they talk about um, they talk about their team, but I mean, I can tell you that I have, in my team, I have all these super investors and, cryptocurrency innovators. But will you believe me? So, I mean, there has to be some kind of check and balance in that. So they don't meet that requirement. Show satisfied customers or users, they don't have that either. Um, they are minting during the ICO, so they already have their tokens, so they're not creating them as people are buying them. So the risk return ratio, um, well, it all depends on, I mean, the fact that they have their staking platform already is a good thing, but it also depends on, you can have a staking platform, but if there's no value in the token, then you're staking, zero. So you can't multiply zero by zero. Let's see. With the team, okay, so the team is of developers. I mean, they say they have 3 developers and um, people of experience. One economy and consultant, 5 years experience. 2 professional traders. 2 artificial intelligence data science experts. 3 web developers. I mean, if they have 3 web developers, um, the website that they just made is not, it doesn't reflect that. So moving on, 2 professional traders and 2 experts of technical support and social media marketing. So yeah, so this is it. Let's see, the last time, this is their was a telegram, and the last thing that was posted was February 22nd, and we're in the 20 February 23rd, I think it is. So yeah, February 23rd. So the last post was on, wait, let me join. Maybe it's because I didn't join. So it seems like the last post was on the 22nd. So after their what's it called? After their drawing, um, I guess they closed up the comments. I'm not sure. So um, I don't know. You guys might want to take a look at that and see what you guys think about the fact that nobody's posting anymore after the drawing. Um, okay, well, this is Crypto Kyo, and I'm just giving you, a review of Crystal Token. I have no affiliate to it. I just wanted to give you a review on it, and I give you my perspective on it. And of course, you make your own decision. You listen to your own intuition, and you you give yourself some guidelines to go by when investing in new ICOs. This is Crypto Kyo. Like, share, and hit the notification bell. And I will definitely see you in the next video.